Well, good afternoon from New York and welcome to Levin's first Money Flow event. Purpose of the session today is to discuss and explore trends in funding, what's impacting the green tech, fintech and health tech markets right now, and what we will see differently in terms of VC interest and what advice we can give to founders and founding teams. My name is Kesi Johnson. I'm the VP of Global Client Success at Levin Group. We're a tech talent marketplace and we're committed to connecting the very best senior talent across change-making tech sectors. Joining me today are our incredible panelists, so thank you all for volunteering your time. I'll let you introduce yourselves, but starting with Sam, if you'd like to go first.
Sure. Hi, everyone. I'm Sam Grassle. I work for a company called Elemental Excelerator. We're a leading nonprofit that focuses on scaling climate tech solutions and social impact for communities. So we invest in first-of-a-kind projects in climate tech, and we embed equity and access in climate solutions. We do way more than writing a check. We offer a full suite of hands-on services for entrepreneurs. We provide coaching, introductions to support, and help with deployments. We have over half a dozen programs available to our entrepreneurs, and I can talk about that a little bit later. But I specifically manage the energy mobility portfolio at Elemental. Prior to this, I had a background working in micromobility specifically on the startup side, and I did that for several years. And I also worked for the city of New York, where I focused on helping entrepreneurs navigate the complex procurement processes that are involved in working with the city. So now I've joined Elemental last year, and I kind of have come full circle working for startups, government, and now the investing side. So happy to be here.
Incredible, thank you. And Brian, if you'd like to go next.
Yeah, hi everybody. My name is Brian Morris. I'm currently self-employed. I have over 20 years of health experience, technology focused. I most recently been working in product leadership roles in scrappy startups focused on value-based healthcare. And that's where I'm going to be focused as value-based healthcare and interoperability with my startup ideas. And prior to that, I worked at companies that were acquired with Fortune 50 companies, including McKesson, ResMed, and Global Payments. So I've had some really great experience taking and scaling small organizations through venture capital and successful exits into acquisitions, Fortune 50 companies. And prior to that, I was at MUSC and graduated as a pharmacist, and I've focused on healthcare technology and building systems and services for providers and payers my entire career. I'm currently in Atlanta, Georgia, which is also a hotbed for healthcare technology. So that is a great advantage, and I'm really happy to be here on this panel today.
Brilliant, thank you so much. And last but certainly not least, Michelle.
Hi, everyone. I want to echo Atlanta as also a hotbed for FinTech. There's a lot of big organizations and startups are moving there as well. My name's Michelle Tran. I am co-founder of NYC FinTech Women. We're a 10,000 plus member organization, primarily based in New York, but with chapters in San Francisco, Chicago, soon to be Atlanta, and a couple other places. Our mission is to empower, connect, and promote women in FinTech, and we do that through a number of different ways. The main goal is to amplify our voice and to increase our presence within the FinTech community. I also am a Senior Vice President, Head of Enterprise Sales and Channel Partnerships for Vestwell. Vestwell is a digital 401k platform. So what we're trying to do in the market is really help people save more. So when you think about the greater retirement market, we're a technology platform that really enables a lot of savers and employers to offer retirement solutions in the market. There's a really big need right now and helping that conversation along. And it's been a great journey in terms of seeing a lot of opportunity there. My background is financial services through and through. So I spent a number of years at asset managers, in tech forward firms like Apex, who help the likes of the Robinhoods and the Betterments. So very, very embedded in the FinTech space. But I'm really excited to be on a panel with a pharmacist as well. That's a first for me.
Excellent, thank you. Yes, I think it's really exciting to have the expertise all in one place. I think what's different for Levin, so we have specialized brands, Storm 2 servicing the FinTech market, Storm 3 servicing HealthTech, and Storm 4 for GreenTech. So the insights from all of you guys from different areas have far-reaching implications for all the clients that we service and the problems that we try to solve for them, and the VCs that we partner with too. So yeah, hopefully lots of interesting commonalities and themes between the landscapes. So to kick off, I'd love to discuss the key differences you're seeing between the landscape founders and maybe walking into in 2023 versus what we've seen in years previously. Michelle, starting with you, across your position at Vestwell and the other appointments that you just mentioned, what are the key differences in the FinTech landscape this year?
I think the key difference probably isn't much different from, kind of green tech and health tech is the desire to grow at all costs. So financing is now more expensive, resources are more expensive. And so there's less of a desire to say, here's a big check and just grow however you need. There's more scrutiny in terms of what is that revenue, how do you drive that revenue, and the gross margin behind that revenue. And so that's kind of the overall big change that we're seeing in this marketplace is because of the higher interest rates, expectation that there's going to be a recession, high inflation. There's a little bit less money to go around. And so there's a higher scrutiny on where are those checks going, where are those resources going. What we've seen specifically in 2022 was it did decline pretty significantly from 2021. That being said, 2021 was quite a banner year. 2021 itself was astronomical in terms of investing and funding. In 2022, the total amount that actually went into VC funding was around $75 billion. That was actually over, 20 billion over 2020. So there still is an increase over time. If you pair it all the way back, it's already 10x from like 10 years ago. So you're seeing a lot more funding. It's just a switch, a bit of a change from last year of what we're seeing. What we're also seeing is kind of, some trends that we're seeing in the space when it comes to the industry of FinTech. Consumer tech is having a little bit of a harder time. Lending space is having a little bit of a harder time. You think interest rate and the impact there. But where we are seeing continued investment is within the payment space, especially when you think about enterprise, B2B payments. How do you facilitate, no pun intended, money flow between organizations? And that's where we're seeing, the percentage of VC funding continuing to be not necessarily concentrated, but the majority of it is within the payment space. The crypto winter that we've been going through has been pretty interesting as well, with everything with FTX hitting. So there's, again, a higher scrutiny in terms of the companies that are being invested in. I think the change in terms of the next stage of the company from an acquisition, an IPO, standpoint, that slowed down, right? SPACs were all the rage in 2021 and then really kind of died down in 2022. And you just really don't hear about SPACs anymore. And so the opportunities to really kind of exit have dried up, a little bit more than they have before. And so that's had an impact as well.
Interesting. I think that's definitely something that I think to consider that backdrop of actually was that super high levels of funding in 2021. Did that create a stronger backdrop that made last year seem like a bit more of an aggressive decline than it actually was? Can certainly echo the payment sentiment as well, so much so that we actually launched a hyper specialized brand under Storm 2 that just works with payments companies because the need and demand for even deeper knowledge within that space just grew astronomically. So that makes sense. Amazing. Thank you. Brian, when we spoke initially, you also echoed a similar sentiment, actually. So investors being more cautious in health tech than previous years. Can you speak to that?
That's right, Kesi. A lot of similarities there, as Michelle mentioned, in FinTech. The macroeconomic, we're all in that same macroeconomic environment with interest rates rising, inflation, and you see in the news about some of the tech layoffs. So there's definitely a damping force going on. But yeah, 2022 was still very strong, 22 billion. But when you put that, in context with how things went in 2021, kind of similar as Michelle mentioned, it's really a high bar and it's hard to keep repeating that kind of performance over time. So in 2021, when we had 30 billion over 700 deals, and many of the exits early on were really strong, 21 unicorns through Q1 to Q3 in 2022. Of course, then the slowdown hits in Q4, no unicorns in Q4 2022, and a bunch of the IPOs, they didn't take off and soar as expected. So that kind of weighed heavily on 2022. And so, yeah, that's a real damping force for all of us. Now, healthcare is also unique in that, we had that boom with COVID and completely disrupted the market, and a lot of new entrants and a lot of innovative technologies, particularly with remote, monitoring and digital health, virtual visits for providers. That became commonplace and that accelerated. But again, that's all kind of, crashing down. Some of the publicly traded companies that are out there have seen their valuations significantly diminished from that. So the other things that I think in 2022 that, we saw that will continue on into 2023, and we'll talk more about this in a little bit, but, Chat GPT, and, we can't have this conversation without mentioning them, and just the AI boom that has occurred. And I like to benchmark that against what AI solutions have been FDA approved. And in 2022, there were 115 FDA approvals, and that's more than ever before. And we're going to continue to see that kind of growth in the FDA approved sector, as well as other what's becoming known as digital therapeutics, a whole new category of software that will drive, monitoring and ultimately, helping with therapy and prevention of disease. So AI applications and digital therapeutics, and also just, healthcare is such a big market. There's still so much administrative burden that we can take out of the system. So there was a lot of success in 2022 with that. And the other thing that relates there is the COVID-19, crisis again. That created a massive amount of burnout amongst healthcare providers. And a lot of innovative companies came to the market to solve staffing issues and help, fill in the gaps in staffing that providers were having, and helping people, get vaccinated, a huge push for providers and health tech in general. And so now that's kind of waning a little bit, but there's still some hope and opportunity that we'll talk about a little bit more. The other thing that I would mention in closing is just the amount of data that we're collecting. And so we saw a number of companies that popped up supporting analytics and the environment, the amount of data that we're collecting every day, because almost all health systems are digitized now. Paper's largely a thing of the past. There's still pockets of opportunity there, but the electronic data, and then turning all that data into insights, into actionable information, and using it strategically for where providers are going to place their next bets. There was a lot of that in 2022, but I think there's going to be even more of that in 2023. I mean, honestly, entrepreneurship is driven by optimism. So the glass is definitely more than half full, right?
Interesting. I would love to touch on definitely the AI piece, because I know that in terms of the impact that is being questioned around hiring practices, I know there are audit laws actually that prevent the use of AI specifically as it pertains to recruitment. So we've been looking at the implications for us internally, but of course for our clients across the board. And I know for a fact that it has implications with it within FinTech. But from your opinion, then also, Sam, within Elemental, are there changes in how your team are assessing companies that have access to, your portfolio or the different tracks that you offer?
Yeah, so I think the question of 2022 versus 2023 is interesting for climate tech, because we're, as a classification, fairly new compared to, healthcare and FinTech. And so, traditionally, I think it's been measured more in energy or transportation as distinct sectors. But looking overall at climate tech investments, last year, climate tech startups made up more than a quarter of total VC investments in the first 3 quarters of 2022. So just immense growth in that area. And Bloomberg NEF just actually came out with a report that in 2022, there was a worldwide total investment of 1.1 trillion in low carbon technologies, matching investments in fossil fuels for the first time, which is just really exciting for the planet and for this industry as a whole. And so climate tech now is actually 40 times larger than it was a decade ago, climate tech VC. So I've just seen, a huge emergence of VCs popping up in this space personally, of just like the people I'm connecting with and the opportunities for entrepreneurs. We saw a lot in 2022, and I anticipate it'll grow more in 2023. In preparation for this event, I took a look at a resource called CTVC, which is Climate Tech VC. And if anyone's interested in this, it's a great resource newsletter that kind of examines the overall impact. And we're seeing that, going into this year, there's around 300 billion in dry powder for climate tech startups going into 2023, which is an immense opportunity for everyone working in that space. Startups focused on decarbonizing transportation have usually been the largest recipients of funding. At Elemental, we have quite a large mobility portfolio too. And we expect that innovations in the future are going to focus on reducing emissions in heavy industry, improving efficiency in buildings and processes, and more energy generation. Something that we're looking to definitely is, with this explosion of renewables, how can we invest in technologies that will enable more renewables to get onto the grid. So that's a challenge that we want to make sure that all this energy is getting utilized in the most efficient way possible. I think the other thing I want to mention is we're still really early in the climate tech maturation phase. So we're about 4 years into the median of the 9 to 10 year cycle to exit. And this is even longer in hard tech. And so we're expecting a lot of climate exit activity later 2026. And similar to what Michelle mentioned, IPOs, which are the gold standard still in exits, are going to be, they were difficult last year, and they're probably going to be difficult this year just based on the market environments that we're working in. But our entrepreneurs all are working on, a longer time horizon, and need to work with investors that understand the nature of the business, that it's just going to take a longer time, especially in, asset intensive industries.
Interesting. And hopefully not too naive a question, but is that a gap that, you say it's fascinating to think that climate tech, that VC landscape being 40 times larger and lots of new players coming to the field, is that something where maybe an increase in people that are specialized in investing in these types of companies and have that understanding that it is a different type of market as opposed to, a fund that's looking to hedge and just broaden out what they invest in?
For sure. There are many specialized investors popping up. And I would say that especially in those asset intensive industries that I mentioned, it's really important to match these companies with investors that understand the landscape and how that works. There's a lot of climate tech that works in SaaS specific industries too, and those are important also, but way easier for tech investors to sort of wrap their head around, as opposed to the broader infrastructure heavy investments that we at Elemental look to invest in, because a lot of them will have many an exponentially large impact on climate change.
That makes sense. Talking about then, the maturity of the market, then I think is a good segue to you, Michelle. Obviously, FinTech being a much more mature market compared to GreenTech or HealthTech also. So what growth areas are you seeing that are sort of those bright spots that are ripe for investment in the landscape of FinTech?
So one area where we see trending, and where we see a lot of investments and eyes on, is based on geography. And so emerging markets, Nigeria, Brazil, others, Indonesia, where we're seeing really a growth globally of FinTech. And if you think about kind of the reason why, right? These are countries that don't necessarily have, they have infrastructure, but they can really rely on technology to help facilitate kind of more money flow, more facilitation of capital markets, et cetera. And so that's where we're seeing kind of a big kind of rise in terms of VC investing and investing. A lot of firms kind of looking into the emerging markets. There's Chipper Cash, and you see a couple other the Brazilian firms that went public last year, Nubank. And so there's a lot of movement in that area. I think outside of that, where we are continuing to see emerging trends and growth is, again, the payment space, embedded finance. So that's kind of a hot word of 2022 and continues to be the hot word of 2023. But how do you piece together these technologies to really facilitate and support bigger institutions? And so it's not just banking as a service, or it's not just, kind of anything as a service, but how do you really tie together banking and payments and capital markets and all those pieces together to really help support organizations? And so that's where we see continued investment there. I wouldn't say that's like a trend, because that's just continued, where people are really seeing value on how do you build enterprise or B2B technology, FinTech specifically.
That makes sense. Is there any piece on, so I wanted to revert back briefly on that AI topic also. Were there any things that stood out in your mind there, Michelle? We're talking about the impact of AI and what that could mean for FinTech specifically.
Yeah, I think this AI is always an interesting one within FinTech, and my experience has been primarily within wealth tech. And it's funny because no matter if I don't even say AI, everyone always like, oh, I just heard you say AI. So I think people always just dream of, how do you use AI within every technology? And it's getting there, right? Like even, today at Vestwell, our platform, as good as data in. And so for us, we use AI as in terms of making sure that we have good data in, and that you're seeing that across the board with a number of organizations and employing AI. AI is also being used a lot in terms of how do you face the consumer? How do you face the client? What are those smart ways to interact? And so that, kind of brings up the chat GPT is really going to, I think, this year we'll see in 2023 how that permeates our market a little bit more. I think it's still early days. It's funny, I asked my cousins who are in college if they're using chat GPT, and I think they're supposed to say no, but they all said yes. So they're all using it in some form or fashion, and it's gonna go and span, to everyone. So it's really kind of up to us in the FinTech sector to say, okay, how do we use this in the right way for both the consumers and then internally too? So building out the right mechanisms to serve our consumers.
Okay, excellent. So let's talk about founders then. So I'd like to think about making sure that they have access to the resources that they need. So, Brian, I know we spoke about this, but in your opinion, in health tech specifically, what does that community of founders need?
So definitely, I think Michelle touched on it, Sam touched on it a little bit, is the right partner that's going to help them grow at the right time. There's always the question about the funding. Is it going to be how much dilution is going to be involved? But definitely a funding partner that can help you make the connections. Maybe they have other assets in their portfolio that can help your business grow. The healthcare market's been going through extraordinary vertical integration. A lot of folks are kind of surprised that the FTC isn't stepping in more to temper some of that. But there's definitely a lot of opportunity, and the reason is because the shift from fee for service to value-based healthcare, and there's been some kind of pullback in the Stark and the anti-competition laws that would in the past have prohibited some of these arrangements, but the government has realized and started to embrace the idea that some vertical integration is a healthy thing. So if you're a founder and you're looking for capital and you can partner with somebody that can help you grow up down in your supply chain, I think that's going to be a tremendous value. Just as one example.
Interesting. Okay, and then on the taking that into the green tech space, then Sam, I know the Elemental support seed and like growth stage companies through your project track. So there is funding that's available, but also founders go through training. What's the advice that you're giving to founders in the current climate?
Yeah, so we have, Elemental, our programming has been carefully designed. We've been around for 12 years, and all of the programs that we have are specifically to meet the needs of entrepreneurs in the climate today. And so the portfolio team where I sit, we provide hands-on support on specific projects, and we provide funding to deploy those projects in places that you probably would not otherwise have done the project, and a traditional funder might not be looking to do that. But we do that as a proof point to be able to deploy these technologies in frontline communities that maybe traditionally wouldn't have access to it. And so that's a differentiator for us, and something that I think entrepreneurs should really consider as an important factor of how they're having an equitable impact on their technologies. We've also built a policy lab, which I think is really critical resources for climate tech entrepreneurs right now. We provide coaching and opportunities to contribute to public policy dialogues and take advantage of upcoming opportunities. The big one is the IRA, the Inflation Reduction Act, where there's incredible amount of funding and resources coming from the federal government in 2023. I should have mentioned that in the 2023 opportunities, but that is something that is really exciting. And we provide support for entrepreneurs, but I would say, advice is, definitely plugging into that policy, those policy opportunities. The EU is right behind us with their new Green Deal legislation, so there'll be opportunities there too. So I'd say don't sleep on policy as an advice. We also have an equity and access team, and we support entrepreneurs as they build inclusive teams and also have meaningful and equitable impacts in frontline communities. And so we're publishing resources all the time on this, and I'd encourage folks to check out what we're doing there. And then to what Brian was speaking about, we have a partnerships team called Navigator, which is we bring corporate partners in to Elemental, and this is an opportunity to connect with startups who, as potential customers, strategic partners, and learn about, what are all the up and coming technologies in climate tech. So it's a win-win for both sides, and we've seen a lot of success there. So I think that, for entrepreneurs that are looking to, scale their businesses next year, getting involved with those partners that can help you strategically with the right corporate partners, it is really important, and something you should take and consider when you're considering who you're working with. Yeah.
So Kesi, I'd like to add a couple of things to that too. So
Please.
Definitely, as you mentioned, Sam, finding the right investor that has the corporate partners, right? A lot of these corporates are now LPs in these VCs, right? And so the goal of the VC then is to help make that connection because the VC wants to see revenue growth. And so finding the right investor, venture capital firm that has really great LPs who sit on the other side, who then, that VC then is responsible for facilitating that potentially commercial opportunity between the LPs and the firm. The other thing for entrepreneurs just to keep sight of too, and something that we think about, and as we think about in the FinTech space, is more strategic commercial partners when it comes to investing. And so, when you think about financial services, every single financial services firm has an investing arm. JP Morgan, BlackRock, Morgan, you name it, KeyBank, everybody has an investing arm. Everyone's really interested in where's that FinTech that will help facilitate some type of business opportunity within my world. And I'd like to invest in them. And so there's two paths there, right? To say, hey, I need to raise money. Great, picking on JP Morgan, great partner. They will, not only give us an investment, but they'll also help open doors within JP Morgan to help facilitate that partnership, that enterprise deal, whatever it is. And so having these strategics, what I call them, on your cap table as you think about the investors is really important, right? It's not just who can write you the biggest check, but to Sam's point, who has the resources that can support you, who can make the introductions, and then is there a greater opportunity with that firm from a commercial perspective? And so that's the kind of lens that founders should really think of. I know probably if you're a brand new founder, that can be a bit difficult, but that's where we're working with one or two VCs to help you think about that funding strategy is really important.
That's brilliant advice. Like you say, something outside of purely the funding and then the amount. There's this plethora of other avenues that need to be considered and explored when thinking about who to partner with. Brilliant. Okay, so for the VCs, then I guess other side of the coin, when assessing where to put that money and supporting growth missions, how do we encourage a focus on improving the diversity of who receives funding? I know that's something that aligns with personal missions for all of you. Sam, my thought was to kick off with you because I know that the Elemental portfolio is really diverse. How has that been curated, and how would you advise maybe people in the same space would want to achieve something similar?
Yeah, so I mentioned it earlier, but Elemental is a nonprofit VC. And so we are impact first investors and then financial returns second. And this doesn't mean that we haven't had great success in our portfolio. And actually, we have one of the most successful portfolios in the market. So we have had 151 startups go through our program, and 25 have celebrated exits. So we have a 17% exit rate. We have a very specific focus on traditionally excluded founders. And so there has been a lot of, in terms of trends, bad data around the amount of VC money that has gone to traditionally excluded founders, especially in the last 2 years. I think it's less than 2%. Goes towards people of color or women. But our portfolio is 48%. And that's because we're very intentional about who we work with. I guess the main takeaway there is like we have an incredibly successful portfolio with this focus and equity in, and by providing the supports that are specifically needed for traditionally excluded founders. That is one way we're trying to move the needle in the industry. I know, just from personal experience as a woman, a lot of women feel, imposter syndrome when they're going to VCs. And those are types of things that we try to specifically address in going through an Elemental of like how to engage with your company and be successful with working in the landscape that we are. And so, yeah, that's how our approach, and we've been very intentional about trying to get diverse founders.
Okay, well, I think the intentionality is so important, and through actually this conversation and the previous panel that I hosted a couple of months ago focused on women execs in VC, and actually Ramsey joined from Earthshop for that particular panel. But it is intentionality. It doesn't happen by magic, but at the same time, you can still enjoy incredible return on investment by supporting diverse teams. Brian, I know you and I discussed, the importance of serving those, the historically underserved. What impact can thinking this way have on VC investment in health tech specifically?
So I think there's this special combination when we've got a founder that's looking to partner with a VC, and that founder has a real personal connection because healthcare is quite personal, and if you've got a founder, and so some of the folks that I'm working with that I really enjoy, they've got some great stories and they're seeing some great connections and progress with their business. So founder with a son who struggled with severe inflammatory bowel disease, and it's a lifelong kind of condition. It can be severely debilitating emotionally, as well as physically, and limit work prospects and things of that nature. So when you've got a person that has had some really great experience in the corporate world and has actually maybe done deals as a general manager or a senior VP, bringing in new companies into that corporate environment, and bringing them into the fold and helping them with funding and seeing ones that work and ones that don't work. And so he's got some really good management experience, but he's also got that personal connection. Another female founder who works. She's got a really great startup for fertility business, and she struggled conceiving on her own, and so she can really relate. And she's built a really good established base with some really strong recurrent revenue. Another one, female hair loss, and so she understands how difficult that patient journey is and how stigmatizing that can be, and again, just physically and emotionally and at work. And so these these types of founders that have that kind of personal connection, but they also have either some corporate background experience, or they've got their business up and running bootstrap and have shown that they can, bring in and deliver significant annual recurring revenue. Those candidates are really poised for success to find a VC partner. The other one that we talked about, and Michelle touched on it, I think, is there's opportunities that transcend. A lot of the U.S. health market is just tremendously big and complex and tons of opportunity, but there's opportunities that transcend the U.S. market, particularly back again to digital therapeutics and some of these FDA AI approved software as medical devices. These things can be taken outside the country, and then like a VC partner that can help them with connections outside the country, just a phenomenal kind of fit. I think, is that aligned with what you were talking about and looking for?
Yeah, absolutely. I know we spoke about, I think there was the radiography specific example as well, which I thought was fascinating. I feel like there's so many, when you get into the mission with HealthTech and you get into the mission with GreenTech, some of this sort of leaps straight off the page at you. Michelle, I feel like FinTech gets a way worse rep in terms of the lacking diversity piece, whether that's gender or ethnicity, or whether it's just, thought diversity. Where do you feel maybe the bright spots of hope are for in FinTech when we look at, how we can encourage VCs to invest in, I guess, in more of a mission-led way?
We need more of Sams and Elementals to be in the VC space, where they're super intentional about investing in females and diverse founders. And totally echo everything Sam said, right? It all comes back down to intention and putting that structure in place. And it comes down to who's writing the check. Who are you writing the check to, right? And that's an issue. The bright spot, I'm not quite sure, but the metric of the 2% for female founders, and then if you drill even further down to founders of diversity, is pretty sad, and it hasn't changed over time. And that's what's really hard to realize and say, how do we impact that change? Because it stayed around, give or take in a percentage over the past 10 years. And that's not where it should be anywhere close to. The metric of a female and male founder combination has gone up over time. So now it's sitting at 15%. So 15%, we'll take a double digit there. But it still should not be that low. And it really does come down to who's writing the check. And I think it needs to start really with the Sequoias and the A16Zs and the big firms who a lot of people follow and they look to. There are a lot of great organizations like the FinTech Collective, Anthemis, all in the FinTech sector, who are very focused on raising the bar and investing specifically in women and people of diversity. And so that's where it's starting, but there just needs to be a lot more of it. And it really comes down, to me, these bigger venture capital firms and the corporate venture capital arms to say, okay, we're going to put in a very specific goal of investing in 50% women and 50% people of diversity. It's good things to see, Goldman Sachs has done that and some other groups have done that, but it just needs to happen more. And there needs to be more visibility on it. And that's what's really going to change that 2% number. It's just sad. I've had this conversation for several years now, and 2% continues to be the stat. And I haven't been able to change that narrative, which is astronomical given the fact that last year was like a crazy funding year. And so you would hope and expect that crazy funding year would also translate to, better percentage numbers for female founders, but that's not the case. So shining light is, hey, all you big VC firms, be very intentional about where you're writing the checks. And that will be our shining light once we do this panel again in the future.
And then the numbers, gone up. That's the goal.
Yeah, that's the goal.
Fantastic. Thank you. Brilliant. Well, I'm really passionate about making sure we leave people with, an additional piece in their toolkit off the back of a panel like this. So one question that I wanted to make sure I asked has also actually come through the Q&A. So it was more around the advice piece. So if you were going to ask one action point for someone to take away from your insights today, what would that be? Whether that's aim towards the VC side of things or aim towards founders in your respective areas of expertise, what's the one action point you would like to have somebody take away? I can pick on you, Brian, because you're not muted, so I don't know if you're good to go on that question.
Yeah, so for me, I think the action point is, we should be prepared at Founders for a bit of a long game. And so, it's take that time to really hone in on, your product market fit, hone in on your distribution channels, hone in on making sure that you've got real annual recurring revenue that you can present and defend. And then, hone in on the bench strength so that, you as a founder, and if you got a co-founder, that you've got, the combination of, strategy, vision, mission, execution, values, diversity, equity, inclusion. That whole bench is critical. The VCs, when they are coming back to the table stronger, or if you're going to get any chance to get at it early in 2023, I think those fundamentals, focusing on ultimately your business and your customers, are going to be the key takeaway. Yeah.
Brilliant. Focusing on the piece there then around, aside from who's writing the checks, Michelle, do you have an action point for people to take away and consider?
Yeah, I think, for founders and non-founders, so anyone at all, you can be an investor. So I want to hammer home that point. I know we've talked about, institutional funding and where these bigger checks are coming from, but a lot of that change too can happen from you and me, and from, the neighbor or the friend. There's a lot of angel networks or a lot of syndicates. And so really to help change that narrative comes down to all of us too, is that we can be on those cap tables and seek out those resources to say, hey, maybe I'm interested in investing. It doesn't have to be $100,000 check. It could be 1,000, it could be 5, it could be a little bit lower. And there's opportunities that exist to start that practice and that kind of getting that experience in terms of investing. And so one thing that we always talk about NYC FinTech Women, especially we have so many members who are always like, hey, I want to invest, but I have no idea where to start. Because it does seem very intimidating. You're up against a lot of this institutional VC, and that's all you hear. Just know that there's a lot of resources out there. Look at angel networks, look at syndicates where you can start investing yourselves. And maybe then you can go down the path of like a Sam, where then, down the line, you're working at a VC and you're really changing that narrative over time. Or you're just, cutting checks as you grow more and more successful and really helping that narrative by doing that. So I want to encourage everyone to consider that and look at resources, and just to know and take it, on my good faith that it's not as intimidating as you think. There are resources there to help you. And I'm, if anyone wants to reach out, very happy to chat with them about it.
Amazing. Thank you. Very kind offer there as well. And Sam, any action points that you would recommend to take away either on either side of the coin?
Yeah. So I think for founders, this is like a really amazing moment in time for climate tech. We have policy momentum, VC momentum, and just generally acceptance that this is an industry that needs to grow for the future of our planet. And so there is an amazing influx of talent coming into this industry that I think a lot of founders should consider this moment in time is to intentionally build up your team, that people are excited to work in climate tech. I've seen it at meetups all across New York City, people who are, have reached really peaks in their career and are now doing this pivot to work in climate tech. So I would say take advantage of that moment and take advantage of the opportunities. Get people on your team that understand what's coming up in the next couple of years to help you take advantage of that and grow your business. A shameless plug, if I can leave for one second. So we reassess climate tech trends every year at Elemental, and we bring this to life in our accelerator cohort, which we will be opening early next month. So if you're a climate tech founder and interested in applying to become part of our program, our applications will be open from March to June, and you can find them at elementalaccelerator.com.
Fantastic. We'll certainly be sharing the link to this afterwards, and then we'll also be generating either like a white paper or a toolkit that people can take away. So we'll also include the information on there regarding that opening. Sam, I know that we facilitated some intros as well. I know that what Elemental have to offer for companies that are growing is just fantastic. So yes, thank you for the plug. Absolutely brilliant. One question that has come in that I would definitely like to close on then is just if there's a newcomer in your space, so a newcomer subsector that as maybe you think is going to balloon this year, maybe that's taking you by surprise, but yeah, anything that sort of popped up that you think is going to have huge impact this year across any sectors. I saw you look up, Michelle. I don't know if that means you've got one.
I was trying to think of one other than what I've mentioned. I think just reiterating, kind of where does embedded finance sit, and it's going to go beyond payments. There's going to be much more stitching together of these financial platforms to really serve institutions. That's going to continue to balloon up. I personally think crypto is going to have a resurgence. I know we're in a crypto winter right now, but that's also a good time for us to assess, okay, what's really needed in the crypto sense? What do we really need to support there? You have big institutions still using crypto as an alternative asset. So it's still going to exist. It just hasn't gone to the 60,000 Bitcoin price that everyone was crazy about. And you see, Yahoo Finance talking about it or your neighbor talking about it. But it's a really good time to reassess kind of where does crypto need to be, and putting the right resources, because I do think it's here to stay, and we'll see kind of what it does over the next couple of years.
Excellent. Brian, I know we spoke about AI applications, but is there anything else within the health tech landscape that you feel might balloon up this year or that's taking you by surprise?
Yeah, the AI, I have to mention that, not just all the radiography, but the other, use cases for AI, particularly where they can get FDA approval or seeking FDA approval, because that shows that it's the real deal. But there's a lot of other real deal AI in digital therapeutics and other, care management, and just taking administrative, friction and burden out of the process for providers to spend more time with patients. So any companies that are really seriously leaning into that, and, if you're attending one of the number of healthcare technology conferences, they're all kind of back in person, and you go and talk to these people and you see what they're working on. There's some real gems there for sure. And then the other space is, companies that are really looking to, push ahead with value-based care. The whole idea of fee for service, which is where you're just, paying, for multiple lab tests, but ultimately your diabetes is not getting any better. We want to push for, the outcomes over the output. And anybody that's really engaged in, there's a lot of federal initiatives around standardizing data and standardizing the measures of quality outcomes from care. Anybody that's really engaged into those kind of activities, initiatives, is got a long runway.
Thank you. And the same question to you, Sam. I know we've spoken about applications within wind and wind power, in terms of like long haul shipping. I know there's a lot of EV that's in the Elemental portfolio, but you're always looking for different gaps that can be filled and broadening that out. So what are some maybe surprising subsectors that have popped out for you?
Yeah. So I think we're at a point in the industry where EV investments is like at a critical tipping point, and adoption is just going to really accelerate across the world. Something that we're excited about and looking into is decarbonizing long-haul maritime shipping. And so global emissions from these types of vessels are 3% of total GHG emissions. And as our supply chain needs grow, it'll just continue to be an important part of the economy. And so we're looking at a lot of different technologies specifically for this. There's low carbon fuels, there's on vessel carbon capture technologies that are happening, and hybridization and all electric opportunities as well. So we're looking at it holistically, but we're definitely excited about the direction of that industry.
Wonderful. I've had one last question pop up, and I were just at time. Looking at the impact of geopolitical factors and global events, so trade tensions, political instability, climate change as well, what impact will that have on financial markets, the global economy? How can businesses and investors navigate these challenges and identify new opportunities for growth? Very substantial question there. I don't know if anyone has any initial instincts on how they might like to say a few words to that.
I think it ties into the themes that we've been touching on, that, there's undoubtedly the geopolitical conflict is going to continue. That's weighing heavily on, the world economy. And, as we were trying to come out of the COVID-19 funk, as were many other countries. So it's a good double whammy. And so I kind of come back to, there's still plenty of bright spots and, working to play the long game.
Brilliant. Thank you. I guess on the climate change piece as well, tying in closely with what you've mentioned, Sam, around policy, and whilst it's not ideal to be hurtling in the direction we are towards the desperate need to solve these problems, having that attention on a global stage for change needing to be made, I assume that can actually have a really positive impact for these businesses that are looking to go and solve these problems.
Exactly. I mean, I think, what we're seeing in Europe and the energy crisis there is just shining a light on the fact that we really need to expand exponentially the investments in green tech and green energy. So I think, definitely destabilizing for many different factors, but showing how important it is to get us away from the fossil fuel economy, not only just for our environment, but for like world peace.
Yeah.
And Kesi, just to add a couple of things, I think the point about policy, right? Like that's definitely one area where you look to how does that policy impact an opportunity or impact a sector? Very specifically within FinTech or retirement tech, within Vestwell, Secure Act 2.0 passed in end of December. And so it opened up a ton of different provisions that will increase small businesses to launch 401k platforms. And so when we think about that as an industry opportunity as a business, we say, okay, how does that impact our business, right? How does that create more growth, not just specifically for retirement, but across wealth industries? And so I think it does go back a lot to what are the tailwinds that policy and state mandates and government just are creating. They're not hampering, but there are a lot of policies that also create opportunities in that space. So really kind of sticking to and kind of having an eye on what's going on policy-wise, either in FinTech or climate tech or health tech, to say, okay, these are new areas that these firms need to pivot, or we need new startups to really serve this population. That's something that we're really focused on the retirement side. But I think policy in general is a great opportunity for folks to say, okay, well, where's that next opportunity? Because we also know policy takes a while to kind of come into play. And so that gives kind of everyone a little bit of time to say, okay, well, what's that next step?
And get up to speed on what they can do in terms of impact. Amazing. Well, I know we're just coming up to time, so I just want to say again, thank you all so much for volunteering your time for the panel today. I know that those insights, as I said, will be hugely impactful, both for clients that we service, helping their businesses grow, on the VC side as well, people that we work with and are partnered with. We'll be certainly looking to share the link to this recording and the content that's generated off the back of it as well. Amazing to be able to hear all of your insights individually, but also great to know, as we've suspected by setting up Levin as a tech talent marketplace across sectors, that there are themes and different focuses that transcend across, whether it's FinTech, whether it's climate tech, or whether it's health tech. So yeah, brilliant. Thank you all so much for your time.
It's a pleasure.